Hello all, welcome back to financialfreedomandhonesty.com. My name is Mark and I have another video of my portfolio for you today. So this is the portfolio update for December 2024. This is the fourth month in this series. And just to call out, I've decided to rename it to Portfolio Update instead of the Stocks I Bought series. Let's dive right in. As always, we'll take a quick look at the major indices versus my RRSP for the month. So, as we can see, the Santa Claus rally did not come through this year. The S&P 500 was down 2.75%, the NASDAQ down 0.5%, the Dow Jones down 5%, and the TSX 60 down 3.5%. Again, this is just comparing the first date in the month to the last date in the month, and then doing the percentage difference there. So that's how I get that. This breaks the 3-month positive streak that I have had, so which is the first three and only 3 videos until this one and blog posts. So, oh well. Hopefully next time we can set a longer streak. Looking at my holdings, I again have VDY, XAW, SCHD, and VTI in my RRSP, and they are also all negative. Diving into my moves for the month, another standard following my formula, DCA formula, where I buy in the TFSA in the middle of the month and RSP at the end of the month. Just to call out, I did not sell anything this month. So starting off, we manually dripped SBLT as part of us investing a portion of our joint account, same as always. That is part of our emergency fund. Most people would say you shouldn't invest your emergency fund, and I think depending on your situation, that's probably true, but I think it doesn't hurt if you invest it in something that is relatively safe. Again, it doesn't mean it's 100% safe. Big difference there. I bought HXQ, so same as the last couple months, trying to increase the percentage of my exposure to the NASDAQ in my TFSA, which is the same reason as I bought QQCL. It's interesting, I saw a couple of videos over the past few weeks, and they were looking at these, and maybe I'll dive into it, but HXQ versus QQCL against the actual index has beaten it. And I believe QQCC, the one without leverage, was very close, like almost tying the index. So it's interesting. You know, traditional way of thinking is that covered calls reduce your upside, and it has been a crazy bull market, but that was not the case, at least for this year. And the last one is bought a little bit of VDY. It dipped a little, and which I thought was kind of strange with the Bank of Canada lowering their interest rates. I know there was a bunch of bank earnings, and some of the banks didn't look that great, at least on paper. And some of them missed some of their targets. And since VDY has a huge percentage held in the banks, that could have contributed to it. But yeah, I still believe in it. Added to my position to, lower not my book cost, but just buying a few more shares at lower than the last couple months. Looking into the actual breakdown of my TFSA, again, I still have that pesky AQN, still have the ETHY, which has been just on an absolute yo-yo. Still looking at trimming both of those, but we'll see. As always, the bank I purchased on my line of credit, and I already mentioned this, but the SBLT was bought with joint money and is part of our emergency fund. So there are 4 positions that I'm thinking about consolidating. So I already talked about AQN and ETHY. T for TELUS, I'm thinking about selling out of it. Maybe opening a position in Utes. I'm not sold on that yet. Or perhaps just adding more to bank. And then TD, debating on trimming that a little bit more. I'm down a bit on it. May wait for it to recover a little bit more. I think that the stock price going down is a little bit overreaction currently. But yeah, highly unlikely that I'd sell out of TD entirely, but we will see. All right, so a new section, something I haven't covered before, and I might do this once a quarter, maybe every month, I'm not sure, but want to take a look at my dividend snowball. And you can calculate dividend snowball by taking your total dividends and dividing by the sum of your net deposits and total dividends. So what does that mean? In plain English, you want to take all of the dollars, all the sources of dollars in your account, and then divide by the total dividends that you received, times by 100%. And what does this tell you? This just essentially says how much are your investments contributing dollar-wise compared to your actual contributions. One day, probably far into the future, but one day I hope that the total dividends is greater than my net deposits. And then even further in the future than that, maybe my yearly dividends is greater than my yearly net deposits. All right. Another thing I haven't called out before is that I actually have two TFSAs. One is my primary. This one's first deposit date, or when I started the account, was in December of 2019. I think I called it out before, but prior to this, I was using a robo-advisor. And once I, decided that I could at least just buy exactly what the robo-advisor would buy, if not anything else, and then not pay the management fee, I would switch to self-directed. So that's what I did. So looking at that one, my dividend snowball is about 15.5%, and my dividend percentage is 6.28%. And then my secondary TFSA, I started in 2023, and its snowball is just over 5%, and my dividend is just over 7%. So it's funny. The original intention of the primary TFSA was to try, or in recent years, I'll say post house buy, so post mid 2021, that it would be a test for primarily covered call ETFs, and then my secondary would be more traditional. So, S&P 500, a couple individual Canadian dividend pairs, that sort of thing. So you would think the covered call TFSA would have a higher dividend percentage, but that's no longer the case. So I've kind of, let's say, strayed from that original idea or original split and kind of muddied the waters a bit. So let's take a look at it. Primary TFSA breakdown, SPLT is in there. So that alone will bring the average down quite a bit. I believe it's paying like a 6.5% right now. I did put a little bit of single stocks, right? AQN, which has slashed its dividends like, I don't even know how many times now, like 3 times, I think. ATD, which has great dividend growth, but it's very small. EIT is, based on the stock price right now, is paying a low dividend. I think mine is about 10%. And so I'm not going to go through them all, but I'll just call it a couple others. PSA, again, as interest rates lower, this will lower. SHOP has no dividend and hits 10% in the portfolio. HXQ has, I believe, no dividend still, but likely a small dividend in the future. So that's why that one is about 6%. That's a good blend of some higher dividend pairs and some low dividend pairs. Then my secondary TFSA, I have 22% in VFV, SP 500, the bank on credit. So this one's really bringing up, right? And I think my dividend percentage on bank is like 18% or something crazy. But yeah, XEI, which is around 5. TELUS, I'm down on TELUS. I think it's paying like 8% now. My dividend percent is not 8%. And TD, same sort of thing. I'm down a little bit on that one. All right, enough of the TFSA. Let's quickly dive into the RRSP buys. So I debated between the two stocks being VTI and SCHD. I really kind of wanted to buy SCHD because it had dipped so much, but I decided to go with VTI. Feel like there's still a possibility for the market to continue running, especially with the change down south of the border. I kind of don't think it'll be a sustained rally, but who knows? What am I? I'm just a random person who likes looking into investing and personal finance. So yeah, I ended up buying VTI, and I will likely buy a large chunk of SCHD in late February, early March, whenever I get my tax return back. Looking at the breakdown of the RSP, I have 50% now. So this is in current market value, USD converted to Canadian, based on Google Finance, and this is the value. So not invested dollars, this is value. Same with all of these charts up here. So 50%, finally cracked that 50% with the VTI, and my VDY, SCHD, and X8W are all near equal. Taking a look at dividend increases and decreases, there was a few actually. So yeah, I think last month I said I was hoping that Canoe or EIT.UN would up their dividend, but they did not. Instead, they did a special year-end non-cash distribution, which I may do a post on. I don't entirely understand exactly what that means, but yeah, that's what they did. XEI appears to be doing a cash special year-end dividend because they're paying out 24 cents, just over 24 cents, and the last couple months they've paid out just under 11 cents. Yeah, I do have this one in drip, so drip hasn't sold yet, but from what I can tell, that is correct, and it is what they have posted on their website. So looking at individual stock tickers, ATD bumped from 0.175 to 0.195, which is almost 11.5% increase. TELUS did their standard bump. I think they typically do it semi-annually. Smaller percentage change this time, but from 0.389 to 0.402. And TD kept their dividend streak going even with all the negative news around TD, and they bumped from 102 to 105. And they typically just do increases once a year at this time of year. So I don't know, unless things drastically change, I doubt we're going to get another bump until this time next year, but we will see. At the end of the day, an increase is an increase. All right, so as we always do, let's take a look at the Fear and Greed Index. So I wrote this article back January 3rd, just a couple of days ago, and I took taking a look there. The market is in fear, and 1 month ago we were greedy, and 1 year ago we were extremely greedy. It's crazy how how much market sentiment can change over, you know, even in like a month, right? Like that's incredible. Still astounds me at sometimes, but it is what it is. All right, so just want to wrap this one up, and hopefully you enjoyed the expansions and the additional ads that I did to this video, as well as me splitting up my TFSA accounts. And that's all for this week, folks. Hope you enjoyed, and I hope you see you back here for my next video. Cheers.